And it's really interesting and really weird at the same time. I mean, you can really see how, I mean, the frustration is building, guys. I don't know about you, but this is really frustrating because look at the price action today. At the opening, boom, we went all the way up to 46. No, it wasn't enough for them, of course, because at 46, it meant a lot more call options closing in the money. On a quadruple witching day, no, that is not possible for the market makers. So they had to they had to put this back down, but for some reason, like really 15 minutes prior to the closing, boom, it went all the way up to 45.17. And right then, because it was above 45, not even went to 46, we saw major volume coming in. Like yesterday, the volume couple of minutes before closing was not even around 20,000 shares being traded. Not even around 15,000 shares being traded. But imagine, just guess. We saw 13 million shares traded like literally minutes before the closing. Why? To make sure this was down. Because when you look at the option chain, guys, at 45, we had an additional 20,000 contracts closing in the money. And look at the shares available to borrow. More than 4.2 million shares. Man, it's really pissing me off now because nobody, I mean, just look. We had a big, large selling order, almost $774,000 in 45 calls expiring today, and they bought instead puts worth of almost 500k to clearly keep this under 45. Look, this is the details. We sell this call option around 45 because they're already and then we sell this to buy this put. Why? Because it was kind of participating to the whole price getting below 45. But when you look what we were sitting on back in Monday or even Tuesday or even Wednesday, I mean, we were easily double this amount. But look now, look at how many puts we are. We are almost a one-to-one parity. Ridiculous. So it doesn't matter because when you look at the price action, when you zoom out a little bit, you can see that even though this retracement, you have to factor in that today was quadruple witching day. Everything was red, and everything has been red for the, up and down, because the market is really frothy. The market is really, there are too many risk on the short term, especially that people tend not to really grasp their head around what is going to be a solution. Even though, there might be some speculation, but it seems like, we think about debt ceiling, inflation tapering, Fed tapering with inflation, Delta variant concerns on slowing down, President Biden saying we may see a recession if the debt ceiling thing is not fixed. So people are just, investors are just like, man, I don't know, man. I'd rather, take some profits now before seeing things settling down a little bit before I can get in back. And believe it or no, AMC is part of the Russell 2000, and this is also taking a hit. So that's it, guys. Anyway, we may still see a rebound, but as of now, sitting on the 40, this is definitely better than where we were almost a month ago around the 30s. So still a huge improvement there. As always, guys, it's just a matter of time. They can still do what they want to do here, but the bottom line is they have to cover. It doesn't matter if they drag 100% volume into the dark pool, they will have to cover. It's simple.